Good morning, traders. This is Rick with Hit and Run Candlesticks, and today's date is Wednesday, September 30th. It's Wednesday, hump day. Hey, tomorrow's payday. Well, what did everybody think of that debate last night? We'll just leave it at that right there. The market is a bit, crazy this morning. Futures are down just a little bit, and I can see from the pre-market over here on the SPY and my VXX chart, we're getting a little bit of tug-of-war between the two. On the daily chart here, it looks like we're going to attempt to close this gap up just a little bit this morning, or today. If we start getting below this 328.80 area, basically the close of the third candle on the morning star signal, so candle 1, candle 2, candle 3, there we have that morning star signal. If we start to get a close below that body there, we should have just a tiny bit of concern. The last thing we want is the SPY to start trading down below these lows of 119.95, and the closer we get to it, the more risky that becomes. Bigger of a chance that we do get down there. So we really want to be careful here. The downtrend is still in place. That has not been changed. We do have confirmation on the bullish morning star signal so far. We're just kind of, between the two blue lines here, just kind of going back and forth right now. So we're going to have to watch very closely what happens today. I want to remind everybody to be careful. This market is likely to be not just choppy, but very choppy going into the election. And sometimes it's hard to keep up with the chop and to time it to make money. So be a little careful. Sometimes it's better to step aside, let all the heavy-duty traders, the big hitters, get out of here. Let them beat each other to death, and then we can come in at a later time and trade. So a little caution here. Over 335 and a half, over 335 and a half, I'll look at that as bullish here. So if we do get back above that level, whether it's today or whether it's 3 days from now, and again, if we start trading below 328.80, that could spell a little bit of trouble here. FNGU, I still maintain this is the chart to follow right now. You want to go where that big tech is. The big tech can save us and it can kill us. So let's keep an eye here. I've got a bottom down here in that 150.90 area that we have. That has proven to be support until it's not. And we have a top up here in this 187, 188 area that has proven to be resistance till it's not. So if we start to see trading below that level, we'll look at that as bearish. Anything above that level, we'll look at that as bullish. Anything in the middle is just chop. That's all it is. This chop can be traded to the long side, as long as you keep a good close eye on it, and the chop can be traded to the downside as well, as long as you keep an eye on it. And your timing is pretty close to being right on. Not only your timing, but your whole attitude about trading in here has got to change compared to normal swing trading. Looks like we are opening up near the highs, which I think that's positive, but I do think we need to get on out of there and get up. Otherwise, what's going to happen is we may slide back down to these lows. VXX just shows no fear whatsoever. Anything below this 2380 area here, this doji, the market will rise and rise well. Anything above this line right in here to, let's see, 28, 20, something like that, 28 and a little change, then the market is going to run into trouble if we start to climb out of that line right there. Anything in the middle, here is just a whole lot of noise. Traders batting the ball back and forth, swapping money back and forth. That's all it is. So be a little careful. Be careful when you chase. You're not chasing something that's overbaked. Make sure you're chasing something, if you're going to chase something based on some rules that you have. I think that would be the best thing to do. So maintain those rules, stick with those rules, trade them through thick and thin. In the end, you'll protect more of your money than lose more of your money. Alrighty, here let's look at another one. 2120. Oops, this is not it. Let's try this again. Let's change this. Okay. Let's take a look at this T2123 chart, and I'm going to go over to right here. So here's the T2123 chart, and what this shows, this is just simply the difference between the number of issues reaching new highs versus new issues reaching new lows. And you can see that we're clearly right now we're in a situation where the market is giving us new lows versus new highs. The green and red line, that's my trend indicator. The yellow line, that's just simply the price, the T2123 line that we're looking at. If we take a look at the 3-bar chart, you can see here how, let's see, let's go yellow. You can see how we slid sideways here until we reached the trend indicator, and then we just dropped, right? See how we're sliding sideways now? And as that happens, we'll slide a little bit more, assuming the market doesn't tank or pop right here. This line will continue to go down, the trend indicator. So the question is, when they have a meeting, very much like this right into here, is this going to be a turn for the market, or is it going to be a drop for the market? So this is something I'll be watching here. As these two come together, will we see new highs in the market based on a 4-week period, or will we start to see new lows based in the market on a 4-week period? So we'll keep an eye on that as well. All right, let's go back to the charts. Let's go back here. So what I want to do today, being Wednesday midweek, for those of you that watched our Saturday morning video on a few charts, I gave some ideas and things we'll be looking at, and I'd like to go over those today. Mainly, I think it's a great day to just go back over a few things we've done, because the market is not exactly, I don't think the market's pristine today. I think the market's going to try to shake off a bad game. Let's just say that. So let's look at Target. Again, on this past Saturday, the video is in the lineup there. If you want to look at our videos, you'll see the Saturday charts to ponder. I had 7 charts out there, and I'd like to go over those and cover those a little bit today on what's going on with them. Before I get to that, I probably ought to mention that yesterday we sold our NIO for 23%. Sold that as we came up to this top up here. So I'm very happy with that trade. Now, I think NIO goes higher, but in the way of the road to the wealth account, the way the road to wealth account works, it's all about taking profits, eliminating risk. And that's what we did. We took our profits, we eliminated risk. Now, I'm pretty confident that it's not an if. I'm pretty confident that's when. When NIO breaks out and sets back up, we will definitely be considering another buy on this and then make money as it runs up. I will keep everybody posted on that on NIO. But for now, we closed it out with 23% on yesterday's candle there. We also bought CRZ, which might not have been a great CZR. Too early in the morning, not enough coffee. We also bought CZR yesterday. Now, when I bought it, the candle was looking a bit better than that, but that's how we ended up closing. We have a bottom down here and a top up here that I've marked out. Below this bottom, I'll have to really consider whether I want the chart. I probably will not. Long as it stays in this area, I'll hang with it. If something was to happen like this, where we're down here and I see some bulls really start coming in, seeing how I bought it in this area up here, that I'm likely to add to it down into this area, lower my cost, providing we have a good solid candle down there, and then looking for us to break out. And by adding to it, lowering my cost, really, we'll see what it does as we approach that trend line. I might even be forced to sell it up there. But we'll keep an eye on that. All right, let's go over these stocks real quick now. Okay, let's take a look at Target. Target was one of the charts that we posted on our Saturday morning Charts to Ponder video. And this is Wednesday, so here's Tuesday, Monday. This candle right here would have been Sunday. I'm sorry, that candle right there would have been Friday's close, right in there. So the video is based on Friday's candle and what has happened previous to that candle. As we drew out the chart here and started putting some ideas out there, I thought between 151.95 and 155.30 would be a good buy area. Well, you can see that we did open up. We opened up inside the buy box just ever so slightly, but it really didn't give us a buy. It just started taking off. And then for Monday, Tuesday, we closed up here with a doji. So what I'm waiting for at this point is a pullback back in this area, and then I'll look at buying some target. I'm looking at a stop less than or close to 3% with an 8% target up here around this 164 mark. But it just, what I wanted Monday was for the chart to open up inside this area, and that would have made a buy in here, and then have it run up and make some money. Instead, again, it opened up a little too high, so now we just have to wait for it to pull back into this area. Nuance is another one. So here would have been Friday's candle. So the video was based on Friday's candle and how it got there. So you can see how we gapped up. So this was not a buy. This would not have triggered a buy on it. And then yesterday we had a little bit more of a pullback. The buy here is between $32.60 and $33. Let me move that out of the way. So ideally, a little bit more of a pullback in this area would make it a possible buy here. We're going to wait for the buy signals. Remember that, make sure it fits everything you are looking at, everything you want in a chart if you choose to buy this. So we'll manage this, we'll monitor it, we'll watch for it. We have it on our live trading alerts, so we'll be alerted when this happens. When it does, if we make that entry, we'll be looking at it as a stop around that 3% or less, with an 8% target up to about 35.40. BYND here is right there. There's Friday's candle. So again, the chart, all the description and markings on the chart was based on Friday's candle and what led up to that. So Friday's candle, that would have been a terrific buy, would it have not? The thing of it is I have a little bit of a problem buying on candles like that. It's just not my thing to buy that. Congratulations for those that might have. You were rewarded handsomely. I guess what I would have wanted to see on this is, all right, we came back down into the area, but I sure would have liked to have seen a smaller candle, buyers stepping in a little slower, I guess, rather than just a great big gap up. Nailed our target up here at 9.5%. So again, congratulations to those that took advantage of BYND. CAR, CARR. This is actually pulling back quite nice here, so I'll be watching for that for a possible buy. Looks like at the moment we're opening up above that green box, just about where we closed yesterday. Maybe we get a little bit of a drop to the downside. I'm looking for a buy between $29.50 and $30.30. That would give us around that 3% stop. And then, of course, we're looking for the buyers to step in and run us back up here to about 32.50 or about 8.5%. We're not quite in that buy area. And if somebody was to consider buying this up into this area, all you have to do is adjust that stop. I wouldn't use 29.15, 29.10 for a stop from up here if you bought it. Just simply that, because that puts you in the 5% area for the stop, and I think that's a little bit high. It's a little too much risk. So you just have to adjust that stop up. So we'll keep an eye on this for that possible run up to 32.50. Twitter. Now, Twitter is one that I am currently in. I did buy some Twitter. I had bought that Friday. And again, this was on our Saturday morning charts to ponder over the weekend. So far, Twitter seems like it's working out pretty good. If it pulls back between $42.50 and $44, I'll consider adding to it. Still looking for a run toward that $47, $48 mark for 11% profit. Snap is another one that was on the list this past Saturday. And here is Friday's candle right there. There's Friday's candle. So you can see how we had this nice little pullback. Would have been a great buy in this 24.48.40 area to 24.80 area right in here. Pretty tight little buy range. But it ended up gapping up, not triggering a buy. Gapping up because we don't want to chase, so just set it aside. Don't get in it. Be patient. The chart will come back. May not come back to here, but the chart will come back to offer another buy at another point. So we ended up with a doji yesterday. It looks like we're going to open up somewhere in the neighborhood of 25.80. If this starts to pull back a little bit, we'll look for that entry. Ultimately, I would like it to pull back into this green area. That's where we might look for a buy, and then another 8.5% run or up to that 26.80 area with something around a 3% or less stop. Another one that was on the list was PEN. Now, here's Friday's candle again, right here. So we've got a doji and a bullish engulf. Friday, we opened up Monday. We put a little tail down here. It just tiptoed down into a green bar. Never really triggered a buy. And then yesterday, we're down here just a little bit more. With a little bit of luck, maybe, just maybe, we pull back just a little bit more. That would give us a better buy area in here. And then we could look for that 25% profit up to about $85. Now, at the moment, it looks like we are opening up right about the top of the green bar. And at the moment, there's a pretty nice bullish candle there, pre-market. Let's see if it holds. This may be a buy today, if it does start to move, because it has made a low to a high to a higher low, if it starts to move here, this is where we might be thinking of an alternate entry. Now, if it starts to move here, I don't really want my stop down in this area. So I would probably consider a stop at yesterday's low. So we'll just make a little adjustment here, something like that. So we'll consider that. And if we're able to get an entry around 71.65, that actually puts you around that 5%. So that may be a little steep, but we had a 6% stop originally. So maybe we've tightened our stop up a little bit. We'll just see how the price action works. Also, we might want to put a little line across here like that, and we'll keep an eye on it if it breaks out. Remember, there's 25%, so there's a little room. That's 25% based on about the middle of this green box. So if we pay a little higher for it, it just means we pull back out of that 25% a little bit. Still a great trade. Could be a 15 to 20% trade. So we'll keep an eye on the pin here. Again, I want to say good morning to everybody. Thank you for watching our video. If you like what you see, give us a thumbs up. If you feel like you want to share it to your trading buddies, please do so. And we'll see everybody in the trading room. Good luck today. Good luck the rest of this week. And be a little cautious. Happy Wednesday, everybody.